Welcome back to Trading Hour. Well, moving on, let's bring you an exclusive conversation from the pharma space on the sidelines of BioAsia 2025 Summit. Our colleague Vinnii caught up with GV Prasad, co-chairman and MD Dr Reddys. She began by asking about the growth drivers post-Revlimid, which has contributed significantly to the company's business over the last few years.
Core business still has growth, and we will continue to drive the growth. We are allocating more of our capital to branded markets, which are more sustainable than the pure generics market. We are also investing in consumer health. We acquired the nicotine replacement therapies from Haleon. And we are also investing in licensing innovative products from various companies around the world. So the core business will keep growing with some pressures in the regulated markets because there is pricing pressure there. Then in the branded markets, we continue to put our capital there. And then, of course, the consumer health and innovation, as I spoke.
So that's all you've spoken about, everything that you're planning to do. You know, Revlimid has given us cash flows also. Your balance sheet has become good. So where do you plan to invest that? Is there anything more that you're looking at?
We are looking for deals all the time, but preferentially we are investing our capital in businesses which are sustainable. So naturally it's the branded generics market, India, it's emerging markets. It's also branded franchises in Europe and US.
So that's also what we could watch out for coming in. So you know what, some important updates had come in. Now MNCs want to move out of certain places. China plus one surely is something that everyone's spoken about. But even from the geopolitical point of view, from Russia, they want to move out. Do you think that, you know, the opportunity that this gives you for the emerging market front, how are you viewing that and how do you see this growth?
Russia is an important market for us. We've been there through many changes in these markets, right from USSR onwards. We are committed to the patients in Russia, and we continue that commitment. We look at opportunities. If there are anything available, it certainly is welcome for us. But we are not getting out of Russia. Russia is a core market for us.
And M&A-wise, you know, what is the strategy there? Any distressed asset that one could be looking at? Because what I hear from some players is that, you know, there is not much there as an M&A activity right now that's happening because there's not much in terms of distressed assets. Anything across the globe?
I think there are restrictions in Russia about taking money out, things like that. So there's not a lot of activity in M&A happening right now.
And across the globe, any opportunities that you would be looking at?
We are open. Like I said, we are always looking for acquisitions which build on our capabilities, our incumbent position. So if there's anything, we will look at it.
India-specific therapies, what are you all focusing on in the next 3 years?
So oncology is a big area for us. We continue to invest in it. We continue to develop generic oncology products, small molecules. We develop biologicals, which is MABs. And we are also are investing in innovation in oncology. We're also licensing in a lot of innovative oncology products from global innovators.
Okay. And, you know, with all of this coming in, how do we anticipate the margins moving for the company, right? At one point of time, and I think Q1 FY24 somewhere, you did have 30%, a few quarters at that. 27.5% right now. What are we envisaging with the new asset?
So margins go up and down depending on the product launches, especially in large markets like the US. Yeah. So right now we have a very good product, the margins are great. But over time, margins will settle down. And I think the margins will be higher in the branded businesses, lower in the commodity generics businesses. APIs, it again depends on the year of...
Where would it settle at?
I don't want to give guidance.
Okay, no worries. Yeah. And Trump and tariffs, because everyone only wants to know about that. You know, do you think that's a bit of a concern coming in? And how much of a possibility for companies actually to move manufacturing there? People are like, this is just something that so companies could shift there.
We are still awaiting clarity on this. Yeah. Right now, we don't know what the tariff will be and what products the tariffs will be imposed on. But if tariffs are still imposed, it's not easy to move production out in scale, especially for the US where the volumes tend to be very high. So the pricing is already not very high in the US. So if you add a little bit of duty tariff on top of that, it should be possible to absorb it. Its only thing is it will increase the cost for the US consumer.
Consumer itself. But it's not a, do you think that would be a possibility or a challenge for our companies to move there, or it's not a sort of a challenge?
I am not really sure whether the economics of manufacturing low value products in the US will add up.
Okay.
Yeah, so in that sense, I think there may be tariffs, but we'll have to watch.
And is India overall ready to get the capacity? Maybe we are talking about the growth or the strategy. Are we prepared for it?
Which growth are we talking about?
To get in the business, maybe on the China plus one, the Russia strategy.
The big growth will be in some segments of the business, not every part of the business. I think emerging markets will still continue their growth journey. India will continue their growth journey around double digit, around 10%. The regulated markets will depend on their product launches and what kind of products we launch.
And you have the capacity to match up the demand. That is, you are getting the demand you're getting.
Yeah, capacity is not a problem.
Not a problem.
It's not a constraint for us.
We will slip into a break on that note. On the other side, market technicals with Sachidanand Utekar.